Ladies and gentlemen, welcome to Real Estate Investor MBA. My name is Tejas Gosai, and I've had the honor of helping hundreds of investors achieve the American dream by creating generational wealth through real estate. I've spent the past few years interviewing the most knowledgeable experts I could find in the business to cut your learning time and conquer the hardest subjects in the game. Check out rei.mba, which my team and I have packed with over 75 interviews and free access to our real estate roadmap, webinars, and publications. If you're listening, I am rooting for you, and you're already on your way to financial freedom. Cheers and happy hunting. Guys, I'm super excited. Today we have Matt Faircloth. Took forever to get this guy on. He is one of the best in the business, somebody I've looked up to for a very long time, very vocal. Couple things. Rich Dad, Poor Dad. I think most of my contemporaries have created a career out of that. And biggerpockets.com. Great resource. If you don't know about it yet, I just gave you a multi-million-dollar gift. But Matt Faircloth, let me tell you about this guy. Matt Faircloth has been a full-time real estate investor since 2005. He's currently the founder and CEO of DeRosa Group. In that time, he has successfully completed projects involving dozens of fix and flips, office buildings, single-family homes, and apartment buildings. He controls thousands of units in multifamily in partnerships with tens of millions of passive investor equity. He is a regular contributor and podcast guest on biggerpockets.com, has an active YouTube channel dedicated to educating investors, and the author of the Amazon bestseller, Raising Private Capital, How to Build Your Real Estate Empire with Other People's Money. So if you don't know about him, please look Matt up. There's a ton in the show notes and information available. Now, I am a manager of a private equity fund. We are buying real estate all the time. It took me years to get this fund off the ground. We're in our second year now. And one of the reasons that we've had some success is there's people like Matt Faircloth and Whitney Sewell. And I could just sound off so many folks that have been on this podcast that have helped me with my career or have been mentors, even mentors from a distance sometime that I just watch and I learn and I study and I look up everything I can find on these people. So Matt Faircloth, best in the business. Please check him out. If you're a first-time listener, this is somebody who you want to become one day. If you're a veteran, this guy has a lot of tricks, and tips. Enjoy. Check out our website, rei.mba. I wish you all the best. Thank you guys so much for following. Enjoy the interview. Ladies and gentlemen, we have the one and only Matt Faircloth. It's a big deal. I've been waiting for this interview. Matt, I'm a big fan of yours. I follow you all over. Welcome to the show.
Tejas, it is an honor to be here. Thank you for having me.
For sure. Rather than waste any time, everybody is kind of, everybody's in a weird spot, and I would much rather just hit the hard points. You have, changed a lot of people's.
From my first deal. Don't do that.
No,
I reached for the cassette tape over here, and I just put that in and I tell you about my first deal. That's fine. That's fine. That's a good conversation to have. But let's talk about today.
Look, you've helped educate so many people all over the country, all over the world, and a lot of stuff that you do on Bigger Pockets. How do we tell people about what's going on right now in real estate? There's new investors that have spent years learning it, trying to get in. There's seasoned investors, some folks that listen to our podcast that are a little bit timid. What is someone like you, who we think is the guru, what do you say to people?
And there's people I look up to that aren't sure what's going on either. And you're giving people a lot of credit talking about people that spent years trying to get in. I think those people just spent 10 grand trying to get in. If it is when they bought a guru course or whatever and are now trying to get involved in real estate. It's an interesting time. I'm not saying that there's not deals to be had, but we're looking at a bunch right now. And I think that the market, those that are sitting on their hands and saying, I'm going to wait and see what happens. Whatever happens, you're going to miss it. And so I think that to be successful in today's market, you've got to change what matters, right? So what matters now is a little more stability, maybe a little bit lower return in exchange for that stability, maybe some upside, but it's okay if it's not like double your money upside, like it's happened in the last couple of years.
Yeah.
So the winds are certainly changing. Is the bottom going to fall on our cages? I don't think so. Or have we already hit a ceiling and are rebounding off of that ceiling and looking to see where we land from there? Yeah, I do. So let's hop in because there's a lot of factors that are in play right now.
Yeah, so I agree with you with don't stop hunting. There's deals
Yeah.
out there. Yes, it has to change, but let's talk about historically. You've dealt with situations like this.
Yeah.
But I'll lay it out. So geopolitical mayhem, we don't want to talk about it, but that's a big
No,
part.
talk about it, man. I'm not going to tell you who I'm voting for.
Me neither.
You know, and I'm not a pick a side. You know, I'm not on let's go Brandon or it was stolen or whatever. I don't care about any of that stuff. I just care about what it does for the economy or for my pocket, for my wallet, right? So yeah, we are at a point of instability like we've never seen before. Maybe more instability than we saw going into COVID. I went worried a little more during COVID because there was we were in a very like a point, maybe this thing will last forever, and then COVID happened. And then the government printed tons of money, and then that inflated the market even further. As things went bananas for like a year, in that year after COVID. And so here we are. So I think it's a really weird place. And like geopolitically, I mean, it's one of those things that we'll give you ifs, right? If China goes into Taiwan, if, the Russian-Ukraine thing dragged out, or if it doesn't, right? Or if, Russia decided to do something really, really stupid to try and turn the war around that they've got going on. The quarter that Putin painted himself in, he decided to get himself out of that quarter by doing something really stupid, right? If any of those things happen, then guess what? Okay, just people still need a place to live, right? I'm not throwing rocks at other asset classes, but they may not need a place to keep their stuff anymore. They might not need a place to store their extra sofa and grandma's hand-me-downs, right? They may not need, the companies may do some layoffs and not need the extra office space that they needed for their expansion in Albuquerque, right? That may happen. The retail provider may shut down a few stores, but people need a place to live. Whether they can afford to pay that rent or not is yet to be seen. But housing is the bottom rung of Maslow's hierarchy of needs. You have to have it. Who pays for it? How it gets paid for is a question mark. And I think that if housing costs got to be crazy, or like a lot of people ended up you just couldn't afford their housing costs, I believe the government's going to step in. I know that makes a lot of people unhappy, but I just think they will. We go into another recession heavy, and the amount of people that can't afford their rent anymore goes way up. The government is going to get involved in that, and that's as they did during COVID. Federal agency-backed loans, Fannie, Freddie, Section 8, they all get involved during COVID, and they'll get involved again if the economy goes really far south, and especially if nasty town happens overseas that really crashes our stock market, that then flows into the job market. So
that's
what I do.
No, amazing. That's the answer I was looking for. It's the hardest one out of the gate, right? How do politics nationally, internationally affect real estate? No one's answered that yet, so I appreciate you.
I don't know. I really don't. My crystal ball is broken, dude. I have no idea what's really going to happen because nobody had COVID in their underwriting. So who knows? If we have another pandemic, I hope not. But maybe we do, right? Maybe, like I said, Russia did drop a nuke and just something stupid, like capital S stupid. And that just really throws the whole world into a loop. But at the end of the day, those things are beyond anyone's control. And so maybe we just deal with it when it comes up. We did during COVID. If I told you that I'm going to drive to Tejas' house, but I'm not going to leave my house until all the traffic lights between me and Tejas' light turn green. I'm going to leave my house then, right? Then I'd never get there. I'd never leave. And if I say that about real estate investing or getting started in business, whatever, you'll never leave, right? If you need to have faith that you'll figure things out, and there are people that will help you when turmoil happens. Right? People get too worried about market timing and everything like that. I didn't know things were going to happen the way that they did. I just have faith that like you throw a business plan, and then it all goes to hell when the world changes. Right? And then even you pivot. You write a new business plan. You try something different. Oh, COVID just happened. What do we do? Okay, let's call a lender. Maybe get some deferrals on mortgage payments if you need it. Maybe you do workout plans with tenants. Maybe you figure it out. And guess what? You will. And so I think that I have theories on how to invest today, not whether you should invest today because the bottom's about to drop out or you don't want to bet the fan or whatever. And by the way, I bought properties in like 2007, right?
That's what I want to hear about. Yeah.
Yeah. We were out. Here's the deal. If you bought a property in 07 that was a speculation you thought was going to double, like I had a buddy that lost a property because he bought it with negative appreciation. Meaning like he bought it on a negative mortgage. So he was, he needed the property value to go up more than the basis of his mortgage was. The basis of his mortgage was going up. So like his payments were $1,000 a month, and he's paying $600. So $400 a month, the principal value of the mortgage on that property was going up. The property all of a sudden didn't appreciate as much anymore. And he was, barely cash flowing even then. So if you do deals that are baked into appreciation, you are investing on something that you can't control, right? If you do a deal like I did, and I'm not high-fiving myself because I lost my ass in 2007 as well. I don't know if I can say that on your show.
No, I love it. You're allowed to swear.
Okay, good. All right, I lost my ass. Yay. So there are properties I did, and then there are properties that I had to pivot my business plan that I was buying a fix and flip. I had 4 fix and flips pre-crash going on. You know what I did? I didn't walk. Some people did. I didn't. I just finished them and I leased them out. And they were like the nicest rentals you'll ever see. They like your stainless steel appliances, the granite countertops.
There's a bidet.
Super bougie and the hardwood floors and all that. But guess what? I rented them out to good people. They still had jobs because not everybody loses their job. Some people do. Guess what? They loses their job, they move out. Then you go and find it that has a job. And then they can rent it out. So the rental market can be very forgiving. And so that's only if you cash flow. My friend that I talked about before was not cash flowing, and so he lost. If you do deals with cash flow now, going into a recessionary environment, going into a point of instability, you'll likely be able to live through whatever show is about to happen, and make it out to the other end. I did that. And those 4 fix and flips, I eventually sold and made good money on. Now, eventually was supposed to be like 4 months on how I was going to hold it for. Held for 4 years, brother.
Yeah.
And I made them out. And look at it. And it's paid. Wasn't like slaying it in cash flow. It wasn't like retiring on the cash flow was making on this for over improved rental properties. But guess what? The tenant's rent carried the debt.
Sure.
And so you hold your credit. Yeah. So if you're going to do deals today, do deals with cash flow. That's my it's not stupid, but it's true.
No, I love what you're saying. People need to hear this. You said 2 great words, faith and be forgiving. So people are still looking for 10 caps and 12 caps, and they're never going to find them. And there's people now who are looking for, 8 caps that might not find them. But, if you can get through it the right way, you have a local team, you could, be okay.
We don't understand what cap rate is.
There you go.
Cap rate is an indicator on good deal, bad deal. Like, I want a 7 cap deal because that means it makes more money. Okay. I'll show you some properties I used to own in Trenton that will trade at a 10 cap, and they'll be great. You can make great cash flow. When people are paying rent, you make great cash flow until they change the rules. You make great cash flow until the property sits vacant for 3 months, right? So the reason why cap rates are higher in certain markets is because cap rates are a measure of risk factor, right? It's not a measure of how good of a deal it is. It's a measure of how risky that deal is, And the higher the cap rate is, the less investors that are in that market that are willing to buy, and the less people are going to be willing to pay for a deal that produces the same cash flow, right? So high cap rates mean high risk. It's just period. Low cap rates mean low risk. Now, you got to decide. It's not like you should do the lowest risk deal you can find, which means the lowest cap rate deal you can find, but you want to bridge cash flow and risk factor. So find a deal that's got a modest enough cap rate, that then maybe the market's going to be willing to buy from you at some point. You go to resell it and you go refinance it, and the tenants are actually going to pay the rent. You're actually going to have a good property, versus the 10 cap that's in a war zone in a bad neighborhood.
Right. So negligible cap rates.
Yeah. Not too high, not too low.
I love it. It's the right way because, look at cash on cash and total ROI and financing and all that fun stuff, which if you haven't heard our podcast, listen to them. And then also, Matt, you got a ton of stuff on the internet that helps people with this. So markets, are you looking at different places? How's your hunt? What do you think about folks that are shopping nationally?
We only shop in a few markets. We're currently in the secondary markets of the Carolinas. So not Charleston, not Raleigh or Charlotte, but yes, Winston-Salem, yes, Wilmington, yes, Greenville, yes, Columbia. Those are the markets that we're shopping in. We also have a sizable portfolio in Lexington, Kentucky. It's sizable enough that we don't need any more there. We're good to go.
What's sizable mean?
1,000 years.
Whew.
Yeah. Our goal is to scale to 8,000. Although we can talk about why that is, but we are not a national buyer. You come at me with a deal in Topeka, I'm like, it's not that I don't like Topeka. I'm sure it's a lovely place with lovely people, and I don't judge Topeka. I'm not in Topeka.
Yeah.
And I don't invest in a market unless I can hit that 1,000 per, right? And the reason why I want to get there is so I can scale and leverage, and I can take the maintenance tech that's working on the property over here, and I can use him to fix the property over here. You can build a team. The portfolio we have in Kentucky has 40 people working.
Wow.
So I can, and then that's great to feel good that I'm employing that many people. They have jobs that are feeding their family on what they make with us. That's great. But in addition, they're also helping us run an economy of scale game in that. And so I can share managers over a couple. I got there's 2 apartment buildings we have that are across the street from each other. And so I can have the manager of property A manage property B because she can see it from her desk. It's right there, right?
Yeah.
You can leverage scale. If you go deep into a regional market, you can leverage scale. If you invest in any market that comes up, or if you're shopping like 30 markets in the continental United States, or you're just surfing LoopNet for the best cap rate you can find, then you're going to be subject to winds of change and just subject to whatever that market's going to deliver you, staff, employee, property manager wise, everything.
Yeah, I guess scale and mitigated risk. That's why you, in a good way, you're micromanaging those territories.
There's a risk on the other side, man. Like when Kentucky had all that rain, I don't know if you remember a month and a half ago, like half of Kentucky was underwater.
Yeah.
We weren't in that region, but you do not know how many investors reached out. Like, hey, are we subject to that? Whatever. Or if I own let's just say I did own in Charleston, South Carolina, and Charleston gets hit by a hurricane and we have 5 properties there, then all your eggs are in that basket, right? So it's not always good, but we've found the good outweighs the bad for staying regionally focused.
About investors. So, I'm a commercial real estate agent, and luckily I now get to manage a private equity fund. It is very different conversations than we've had previously. But you work with a lot, I will say more veteran, seasoned, different types of folks, big folks. Are they asking you what you're going to do? Are you giving assurances to folks?
Yeah. Not always. So first of all, we have about 450 investors in our base. They range from real deal, like firefighters. I have firefighters because we take non-accredited too. We take accredited and non-accredited. I got firefighters, I got school teachers, I got insurance agents, I've got Wall Street people, and I've got people that work for hedge funds, full spectrum. I've got doctors that do liposuction and cardiologists and folks that have written us $1 million checks. And I've got folks that have written us $25,000 and everybody in between.
It's amazing.
So, there are different ranges of questions that come from different investors. So the more seasoned investors that have been around for a while, went to school for it. I talked to a guy this morning. I'm LinkedIn stalking him while I'm talking to him. And I see a guy went to work. I'm like, oh boy, here we go. I got a working guy now.
Yeah.
And of course, he wants to talk about the market, cap rates, and what's the fancy word and everything like that. And I'm fine with all that. And then there's the other end of the spectrum, somebody who's just learning about this thing, who either the doctor or the MD that knows nothing about it, explain to him what a syndication even is. What does that word mean? How did this work? When do I get my money back? Like, how do you guys make money? How do I make money? You start there, or you can go all the way out. So, I mean, I know I'm not dodging your question, but
No,
I get from investors or full spectrum.
yeah. No. That is answering my question. Also, explaining who you work with, I think, is important. Big
Mhm.
part of our program. I'm always just like, whatever level you are, just do it. Like, get
Yeah,
the
yeah.
next deal. I'm Indian, and I have so many doctor colleagues. I went to law school. I was the oddball out, but most of my physician friends who are in their 40s don't want to be doctors, right? They're investing in funds. They're trying to get into real estate. Would you say now more than ever, people are jumping towards funds and organizations to manage in real estate?
We're getting a lot of inbound these days. We're getting a lot of people that want something different. It's funny. I did a presentation for Michael Blanc for his Dealmaker Live conference last year, talking about just the future of real estate investing and where I thought things were going to go. And this was a year ago. This was before rates started going up and inflation concerns and stuff like that. And the Gallup poll that I had pulled up on the board, this is when the stock market was selling at 35. The Dow was at 35,000. It's down now like 28. Right? No, it's down like the Dow's down 20% since then. Okay. Since I did this presentation. But at the time, the Dow was 35, all-time high. 50% of America, 50%, they just said they had faith in Wall Street to reach their financial goals. And it's like, okay, I get people are skeptical, but not for nothing. That market is its highest it's ever been. People are making the most money ever. It is a cash machine right now. Now, it ain't more, but I wonder how many Americans have faith in Wall Street now, right?
Yeah.
After it's fallen off and after Bitcoin went from like 65,000 down to 18. Okay?
Right.
So I think that people are just looking for something different. And I believe that there are funds like what you and I provide and things that are truly alternative. On top of that, the Jobs Act that Obama instituted in 2013, I think.
Yep.
The Jobs Act is allowing, will continue to allow more folks that maybe aren't in the in the $1 million net worth range investing, and that's only the beginning. Like there's more coming on that. They've actually just increased how much money you can raise from not accredited through the Jobs Act. So I think that we are just beginning to see, we as in collective, we, you and me, are just beginning to see the amount of inbound that we're going to see in our funds. Our website inquiries has doubled.
Nice.
And I'd love to just high five myself, but it's all because I do a really great job on podcasts. I think it's because people are out there getting on the magic Google box and talking about places they can invest and reading books and going to bigger pockets and hearing about companies like mine and yours, about places that they can go to park capital. So I think it's just beginning the Wall Street exodus.
I love you saying that, and I agree wholeheartedly. I think, yeah, of course, NFTs too. That's just one
Yes.
But great though to kind of instill in America, like, dude, this was like a couple months, and it's such a fad. Just real estate doesn't go anywhere. At some point, you're gonna do it. At some point, you might take a little bit lower rent. Everything that you're saying. So, all right, let's say 6 months.
I don't know if you will. By the way, I'm not. If you chart the average, started this issue, but if you charted the average housing cost in rent, not price, in rent, the average rent since 1990, it has rarely gone down. Right? It's been pretty much cost of living. Rent has just been fairly steady. Now, housing prices for what house would sell for, that's different, right? And that's going to go up and down. But with the average rent for, let's say, a 1-bedroom, 1-bath in America, that chart's been pretty much up and to the right. And it's not like hockey stick up and down. It's certainly not got cut in half,
right?
And it's not tracked with home prices. So I don't know if you are going to be discounting much. The economy gets off.
Yeah, I guess I'm kind of saying it to, provide some more faith to some of the folks that are kind of weary and historic lows on interest. It's like, it might not be that great, but it's going to work out all right.
Yeah, like crack. These low interest rates and stuff like that. I mean, it's like they were just throwing crack on the street.
Yes.
And it caused a lot of bad deals to happen, and a lot of people that had no business buying them at 2.5% interest rate. And I mean,
and furnaces go out, roofs go out, like all this stuff happens, and then
right. So
I hate it that we got to wrap this stuff up. I'm trying to get to the future. Like what does Matt think about like few years from now, 3 years, 4 years, 5 years from now for your future and your folks, your investors?
I believe that, first of all, I believe, I faith in our country and in the democratic process, and faith that whatever mess we're in, that we as a people, probably not the person sitting in the White House, I don't care who it is, that then they're going to get us out of it. But I think that industry, economy, capitalism are what way to move things forward and get us through this. Just like it got us through 2008. We'll get through this again, whatever this is, right? We'll get out of it and keep on moving and live another day. I believe the future for Matt is to continue. The mantra for my company, I love it so much, I trademarked it, which is to transform lives through real estate. I'm actually a big software, just we haven't had a chance to go there yet, but I want to make a difference with our company. So I will continue to do that, and we will probably expand into new asset classes. We're in multifamily, workforce multifamily housing is our core asset. We're already doing some new construction stuff. And I believe DeRosa will find new asset classes, still involved sticks and bricks and real estate, to bring betterment to people's lives. There are office buildings. There will be, if they're not now, they will be 50% occupied, and they need to get repurposed and rezoned and repositioned. The whole shopping mall thing, that was awesome in the 70s, going away now because everybody's buying stuff off of Jeff Bezos,
Yeah.
So, right. So that's going to change. So I'd like to be a part of that. I want to be a part of the changing tide of the real estate market in America, and to benefit people's lives and help them carry forward strong into the future through repurposing and changing, and also building some new stuff, employing people, like with the real estate that's over their head.
Let's not forget that. You mentioned it earlier, employing a lot of people, but also housing. I mean, you're literally paying for people to go to school, right? You're paying for kids to, have cherished memories in their place. You're paying for a roof over a lot of people's heads. People don't say
most of my properties have playgrounds, amenities, dog park. Some have pools. We do our best to give people a real memorable life, and not like a BS grilling station where you got to put a pull out that nobody uses, that are still cool. We use a real one that's got like the quickie click, propane or natural gas. Like a barbecue station that you and I would actually use. That's one that I could just brag on and say, I got a barbecue station that's really just 4 walls of metal that nobody's ever going to touch. We give people stuff I would use.
It's the detail like that I love, stuff like this for people, those intricate pieces. You'll probably help pick it out. I hope.
Mm-hmm. On my afternoons, I like to pick out the playgrounds. And it's my son's 8. I get him to help me out sometimes.
That was going to be my last thing. You're very driven. I have children. I'd like to hear about you and your family. What keeps you going?
That's my family, my family, my community, knowing I'm helping people do what I do. I like to move my body once a day so I can keep it healthy, so I can keep doing this. I like to hang with my kids and, make them laugh, wrestle with them and get nuts, and I just have fun with my family, my kids. I just soak up as much life as I can while I can.
That's the way to do it. I'm so happy we finally got you on. It took a little while. You're a public figure and celebrity. I feel so honored.
You're trying to get by, man.
No, but how does somebody get a hold of you?
Sure. DeRosaGroup.com. To my website, DEROSA Group, DeRosaGroup.com. They can check out a copy of my book. They can join our investor list if you want to do some passive investment stuff. That's on our website. And you can find all of our social channels are all there as well, including my wife's community, which I have to plug, the real estate investor community, which is there helping women build wealth to themselves.
Brilliant.
Yeah.
It's on the show notes too. So check it out. Talk to Matt. And Matt, again, thank you so much for being here.
Thank you, Tejas. Nice to meet you.
Real Estate Investor MBA, rei.mba. We'll catch you later. Cheers.